Good morning, everyone. Looking at the US stock market, the Dow has early on recovered from the 24,000 psychological level. Since then, we did see the Dow has breached above the 5,400 points, forming the breakout. The pullback just towards the EMA 60, forming a hammer candle along the 25,000 psychological level, and subsequently the continuation pattern was being formed as the Dow rallied towards the 26,200 points. After hitting the 26,200 points, we did see some of the mild weakness on the Dow Jones again over the past couple of days, as the Dow has staged some of the mild pullback just towards the EMA 20 level. We could take this as a potential healthy pullback over the near term, forming the hammer candle towards the EMA 20 for potential flat formation breakout above this 2600. Should the Dow Jones to reclaim the 26,000 psychological level, we could see further upside on the Dow Jones back towards the 26,200 points, or even towards the previous all-time high at the 26,600 points level. In the meantime, the 25,500 will serve as the immediate support level for now. All in all, despite this recent weakness on the Dow Jones index, the Dow is still forming the higher high and also the higher low formation, implying that uptrend is still very much intact on the Dow Jones right now. Similarly, on the S&P 500, the S&P 500 has again recovered from the 2700 psychological level or the EMA 120. Subsequently, the S&P 500 has breached above the 2800 psychological level, as well as closing above the recent all-time high at the 2916 level. After hitting the 2916 level, we did see some of the mild weakness on the S&P 500, pulling back, just closing marginally below the 2900 psychological level. For now, we could take this as a potential short-term breakout. They pull back just towards the EMA 20, which is around the 2875, before the next recovery will resume on the S&P 500 back towards the previous all-time high at 2916, or even towards the new high on the S&P 500. All in all, similar with the Dow, the S&P 500 is still forming the higher high and also the higher low formation, implying that the uptrend is still intact on the S&P 500. Some updates on the crude prices. The crude prices has endured a volatile trading session following the pullback from the recent peak of around the 75 US per barrel mark. Since then, the crude prices has pulled back just towards the 64 and subsequently staged a strong recovery. For now, we are seeing a good recovery of the trend line breakout above these 67, and also the crude prices has once again retested the 70 US barrel level. Just that it has formed a dodgy candle yesterday on the crude prices. So for now, we could see some of the sideways consolidation on the crude prices until we can see a firm breakout and a closing above the 70. Only we can confirm that further upside on the crude prices could be seen back towards the 75. In the meantime, the 67 will serve as the immediate support level for now, followed by the 64 US barrel mark. On this, on a local front, the FMKLCI has then recovered from the EMA 20 level. Yes, since then the key index continues to trend higher, breaching above the 1800 psychological level. However, we see some of the mild weakness on the FMKLCI again. So for now, we could take this as a potential breakout, the potential pullback just towards the 1800 to see how it holds there. If the 1800 level continues to hold over the next couple of weeks, then we could see further upside on the FMKLCI back towards the 1830 or even towards the 1860 level. In the meantime, the 1800 will serve as a very strong defense for now. On the lower liners wise, we are seeing some of the renewed recovery after hitting the recent peak of 15,200 points level, forming a double top formation. We did see the FM small cap index has staged a sharp pullback over the past couple of weeks below the 14,560 points as well. However, the sell-off appears to be abated as the bargain hunting activities on the lower liners has seen the advanced market index forming the bullish candle yesterday. On indicators wise, the MACD histogram has returned green, whereas the RSI has recovered from the oversold position. For now, we expect the bargain hunting activities to extend to continue towards the 14,560 points level. If you look at the weekly chart itself, it's certainly a very good chart. As you can see that earlier we did see some of the continuous weekly buying on the lower liners. Subsequently, 2 weeks of pullback, and this week the FM small cap index could be forming the hammer candle, implying that the recovery will likely to resume towards the 15,200 points level. On stocks wise, we can watch out for firstly will be a KGB. KGB has again recovered from the recent low of 60 cents level. Since then, price continues to form the higher high and also the higher low of formation. The uptrend interrotation formation was also recently re-established. The MA9, 20, 60, and 120 has been in line. And recently, KGB has experienced the short-term breakout pullback just towards the EMA 20 level, and a continuation pattern was formed as KGB has reached above the 86 cents level again. For now, we expect KGB to continue to trend higher towards the recent high of 90.5 cents. Should price breach above the 90.5 cents, further upside will be seen towards the new high of 95 cents level. For now, we are expecting the 95 cents level to be retested over the near term, followed by the 95 cents. Your stop loss point will be located towards the recent low, which is currently located at the 83 cents. If you can take further risk, the final defense will be located towards the 81.5 cents level. On indicators wise, everything appears to be quite positive right now, as you can see that the MACD histogram has returned green, whereas the RSI has recovered from the 50 level as well. If the ringgit continues to weaken, not only the ringgit, the emerging market currencies continues to weaken against the US dollar. We could see some of the export-related companies in play. One of it will be DNO. DNO has hit an intraday high of around the 78.5 cents level, forming the shooting star candle. After forming the shooting star candle, we did see the pullback on the DNO. This is a healthy pullback as there's no heavy sell down on the volumes. The volumes has been on a declining phase, and on yesterday itself, we did see a good bullish Harami candle was being formed on DNO as price has recovered to close above the EMA 60 level. For now, we can monitor for this potential channel formation and breakout above the 73.5 cents level. Should price breach above the 73.5 cents, we could see further upside for DNO back towards the 78.5 cents or even towards the 80 cents level. Your stop loss point will be located towards the recent low, which is located towards the 70.5 cents on DNO. On JHM wise, we are seeing a good recovery pattern on JHM after a heavy sell down towards the 69.5 cents. Since then, JHM has experienced the first wave of our recovery, and price subsequently traded on a sideways manner, and the next wave of recovery was noted since the early of July. And recently, we did see JHM has experienced some of the mild pullback just towards the EMA or 60 level and formed some of the hammer candle along that. However, we did see a good gap up formation on our JHM yesterday, accompanied by some of the mild improvement in volumes. Following yesterday's gap up formation as price closed above the EMA 20, the MACD histogram has returned green, whereas the RSI has recovered from the oversold position, implying that we could see further recovery on JHM back towards the 135. Should the 135 level were to be breached, further upside will be seen towards the 145. The stop loss point will be located towards the recent low of 1 cents a level. On the MACD history wise, in the EMA orientation wise, we are also seeing a potential uptrend orientation formation to be formed. The MA9, 20, 61, 20 could be in line should there be a follow through buying interest. On evergreen, price has again recover from the 42 cents level. Since then, we did see a good recovery pattern on Evergreen back towards the 62.5 cents. After hitting the 62.5 cents, we did see Evergreen has once again pulled back just towards the recent low of the 50.5 cents. The 50.5 cents will serve as a very strong support level for now, as Alone price has also recovered from the 50.5 cents level in early of August. And on yesterday itself, we did see a good bullish candle was being formed and on Evergreen as price closed above the EMA 20 level, accompanied by some of the high volumes being traded. Following the breakout above the EMA 20, we are also seeing the trend line breakout as well as the short-term consolidation breakout above the 55 cents. Following this 55 cents level breakout, we could see further upside for Evergreen back towards the 62.5 cents, followed by the 65.5 cents level. Your stop loss point will be pegged below the 50.5 cents on Evergreen. On a similar case, uh, FPI has again recovered from the recent low of around the 1 15 cents level. Since then, price has recovered just towards the recent peak of 1 52 cents. After hitting the 1 52 cents, we are seeing a sideways consolidation over the past couple of weeks. And on yesterday, price has experienced the short-term trend line breakout, accompanied by some of the improvement in volumes. Following this short-term channel or the trend line breakout, we could expect further upside for FPI back towards the 152. There will be immediate resistance for now, followed by the next target price at the 1 65 cents level. Your stop loss point will be located below the 135 on FPI. Everything appears to be quite positive on FPI right now. As you can see that the histogram has been forming the higher high and also the high low formation. The MACD histogram has turned green yesterday, whereas the RSI is resting above along the 50 level on FPI. Last company for today will be HSS Engineers. HSS Engineers has again recovered from the recent low of 43.5 cents level in tandem with the sell-off in most of the construction companies. Since then, we did see HSS Engineers has experienced the breakout above the 79.5 cents level. And recently, after hitting the recent high of 1 15 cents, we did see a healthy one-day sell-off and subsequently price traded on a sideways manner. So this could imply that HSSAB could be forming the potential breakout, the pullback just towards the EMA 60 level, and a potential continuation pattern given that we are seeing some of the rising volumes being traded on a HSSEB as well over the past 4 trading days. For now, we expect HSSEB to recover towards the 1 ringgit and 6 cents or even towards the 1.615. Your stop loss point will be located towards the 87 cents, and if you can take further risk, the final defense will be located towards the 79.5 cents level on HSS Engineers. If you have any questions, you can put in the chat box and I'll reply you shortly. My equipment, Alan, we did mention during the IPO phase, we could expect the pullback towards the 163 and a potential continuation towards the 193. With 193, it did pull back towards near the 163. It pulled back towards the intraday low of 165. Towards the 165 and recover towards the 193 level, and it continues to maintain its uptrend of formation. If you're holding on to this counter, you can continue to hold on as long as price continues to maintain its position above the EMA 20 EMA 9 level, which is currently located at the 2.4142 cents level. That will be your trading profit for now. If for the next reasons wise, every 20 cents like a 260, 280, and also the 3 ringgit psychological level will serve as the immediate resistance for now. If there's no further question, that will end the morning briefing for today. Thank you.